because everything's crashing in Ireland. Everything's down. And it's not just Ireland. Everything is crashing everywhere. Let's chat about it. We'll have to crack. Guys, Crypto Dinny here. Good to see you on. We'll just let YouTube and Facebook notify the followers to say that Dinny is here and he is ready to spread his fun. Okay? So, as you're doing that, I'll give my little spiel. Guys, I'm not a financial advisor. Look at the head in me. Look at the head in me. I'm a Bitcoiner. I'm a crypto investor. And so please don't take anything you hear on Crypto Dinny as financial advice. If you enjoy the Crypto with Dinny videos, you like hearing me on breaking stuff down, you find you get some value out of it, it's free. If you get value, hit the like button. That's all we ask. Give it a nice like, share it with more people. A lot of people are bleeding hard now, and I think they might need some advice and help them understand long-term fundamentals, because they'll have taken hits, they'll have taken losses, and especially if they're newer to crypto, it's gonna hurt. It hurts everyone. Like, everyone is down. So when I say everything is down, I do mean everything. Stock market is down, gold is down, and crypto markets are down. Some stocks are down 80%. So they're bleeding. Like, Bitcoin's down 50. Peloton, you know Peloton? That was one. It's not just crypto that are taking a beating. The stock market's taking a beating. We'll chat a little bit about why now. We'll chat about why and what to do. And if that sounds good, hit the like button, okay? Because there's some good lessons that you can learn here today. And we get to them in a little bit. And I think this could be a chance to reassess your portfolio and see, is it set up correctly? So that's what we're going to get into. Anyway, I love Warren Buffett quotes. I've studied a lot of investors to try and learn how to be one, and obviously Warren Buffett has been one of the greatest. He's whatever he is now, 100 I think nearly. But he has a quote that says, if you wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes. And that's something that I would apply to any asset that I buy. That am I prepared to sit on this thing for a decade? If I'm looking for a quick flip, it's sort of financial gambling. Let's do it with 0.001% of the portfolio. Let's not do it with 30% of the portfolio or even 10% of the portfolio, because that's too much gambling. Okay, so if you wouldn't hold it for 10 years, you shouldn't hold it for 10 minutes. So when you're assessing your portfolio, ask yourself that of any of the software, protocols, coins, cryptos that you actually have in your portfolio. So a couple of reasons why we're crashing. One, I suppose, the Fed. Everything revolves around what the Fed does over in the US, and they're talking about hiking rates, which is why it's bringing the markets down. And if they do hike rates, yes, maybe it will. How much can they hike the rates? I don't know. By hiking rates, it increases the debt that the government has to repay, and that's going to make it harder for the government. So it's like they're sort of caught between a rock and a hard place. If they don't hike rates, retail people lose all their money from inflation, and there's carnage. If they do hike rates, government struggles to pay back their debt, and it's harder for them to pay it back, so they have to tax people. So there's carnage. Okay, so you have that, all right? And just the talk of it, because it's such an edgy market. Like, remember, the world was closed down. You can't close the world for a year and not think it's going to be repercussions. Crypto Dinny, we've been speaking about this for 2 years now. The repercussions, backlash, and over this decade, it's all going to play out of turning an economy off for pretty much a year. There has to be consequences. So there's the Fed. The next thing, we have FUD everywhere. And as I say, the bigger Bitcoin gets, the more FUD it will attract. It's one of the things I go through in my course. We have Russia's going to ban miners. FUD. On the flip side of that, will I talk about the flip side? No, I won't go through that. I won't go through the bullish case. So I'll just give you all the bad news first. We've media FUD. Okay, and we get cascading media FUD in these markets. It's interesting. I do sound bites for some media, but they only contact me when there's a crash. They never contact me when Commonwealth Bank said we're opening up Bitcoin custody and purchase to our 6.5 million clients in Australia. So it's pretty much like, okay, the whole of Australia is getting access to buy Bitcoin. Wow, that's amazing. Never got a call from them. But anytime crypto crashes, Dinny, would you be able to jump on? We'll have a little talk about this. So I think that's universal, that's worldwide, that media, when crypto pulls back, they want to talk about it. Remember, since March 2020, Bitcoin, the asset, is up 1,000%. and it's gone down 50. So for longer term investors, this is nothing. This is a blip. This is what it does. But obviously for newer people, they're bleeding and they need education. And of course, if they're reading the clickbait headlines, it's not helping them. Okay, we have edgy investors in this market. Okay, we've edgy investors in this market. And this is amazing. Okay. Now remember, I suppose better say, I told you I wasn't a financial advisor, didn't I? I think I did, yeah. I'm not a financial advisor, this isn't financial advice, get away. Right, we've edgy investors in this market because crypto was a retail-driven asset class emergence, okay? So it came from retail. Now, when we look at any other new technology that comes about, it comes from private markets, okay? Private equity markets. So private equity markets, they're not liquid, which means you can't sell them. If you buy into private deals, one, you've got to already be wealthy. So normal people don't get access to this stuff. It's one of the things that I don't like about the legacy system. But one, normal people don't get access to it. So you have to be like a millionaire, or you have to have an income of over 200 grand a year to be able to be accredited, to become an accredited investor, so you can get access to private markets. The second thing about private markets is that you don't have the liquidity. When you buy into private market, you're just stuck with it. You got to hold it for a period of years. You might be holding it for 10 years. Who knows? Okay, so you're not going to have this massive volatility. Okay, but with crypto, because Bitcoin and these cryptos became a retail-driven asset class, it meant that the plebs like me could get in first. And maybe I don't have the sophistication to understand how to allocate into early stage tech or how to venture capital invest. And I just watch YouTube and I see a bit of hype, so I buy something. And I have the liquidity. I can sell at any stage, and if everyone else is selling, well, feck it, I'm selling too. Okay, so that's what gives this market its volatility, which is amazing if you're a little bit more sophisticated investor, because the volatility is where your returns come from. But it does give this market volatility, is sort of edgy investors, because it's retail driven. Now, interesting enough, venture capital has only just started arriving. Traditionally, when the technology comes about and starts, there's a couple of lurkers there down the back who haven't hit the like button. Give it a nice strong press. I'm not asking for push-ups, I'm asking for the finger to press the like button. Now, when a technology comes about, thanks guys, yeah, we like likers. If you like it, you become part of the community. If you don't, you're a lurker, well, you can still become part of the community. We'll still welcome you. You're like, what's it called? The prodigal son. You're always welcome back here. Traditionally, with a traditional technology, okay, venture capital comes in first. They get all the seed rounds and then the private deals, and then eventually it comes to the public markets. Like Coinbase stock came to the public markets, and that was the high of it. It dropped then. Okay, so venture capital is only arriving to crypto. If you Google venture capital entering crypto, you'll see that it sort of blipped along, and 2020 it started to rise. It started to go parabolic growth in 2020, 2021. And now 2022, we're going crazy. So venture capital has just arrived. That's how early we are. Because remember, venture capitalists are the first to invest into these asset classes. So they're only arrived. So this is why retail people have been ahead of venture capital, which is an amazing opportunity if you understand how to navigate it, and but also dangerous waters, because because of the, there's going to be so much scams and so much stuff, there's going to be so much junk around. So venture capital are here, and to me that's really interesting. Okay, that's a very bullish thing, that venture capital are only arriving in 2021. That's how early we actually are in reality. 33 billion was invested into crypto and infrastructure last year. 33 billion. Venture capitalists aren't in the habit of losing money or burning money or throwing money at things that aren't going to make them in return their shareholders a lot more money. Okay, these are professional money managers. So that's the sort of things. I'll focus on fundamentals. Reasons for a drawdown, okay? Money managers are going to have to sell positions. As crypto corrects and starts to get towards their orders or their calls or whatever, their margins, they're going to have to sell, because they have a responsibility to return capital to their investors. They have to. They cannot ride out a bear market, so they'll have to sell out of their positions, which does cause cascading drawdowns. However, you've always heard me say, bear markets are gifts to investors. They are. Okay? If we look at the returns over 10 years, over a decade, Bitcoin's up around 5 million%. Okay? 5 million. S&P is up 250 or something percent. Okay, pretty good. And gold's up around 10%. All right, so if you're prepared to hold the thing like Warren Buffett for 10 years, well, Jesus, the last 10 years are fairly bullish. Not in, like the past doesn't equal the future, but if you look back, sometimes we look back to see what the future's going to look like. Fairly bullish for Bitcoin, okay? Fairly bullish. Was there volatility? There was extreme volatility. There was 85% drawdown sometimes, okay? Bitcoin has recently, in the recent couple of years, it's had 50% drawdowns. So this is nothing new. And I did mention, since March 2020, Bitcoin is up 1,000%, which is better than the S&P over 10 years. These are the sort of things I focus on as an investor, all right? The next thing I focus on is the fundamentals. Have the fundamentals changed of Bitcoin, the asset? Now I'm focused on Bitcoin, and we'll talk a little bit about other stuff in a second, but have the fundamentals changed of Bitcoin? Has Bitcoin broken? Has anything happened to the code? No, fundamentals have actually gotten much stronger over the last 12 months. Every week the fundamentals seem to be getting stronger. Okay, that's good. So it's cheaper, but the fundamentals haven't broken. That's good, because I'm an investor, I'm thinking of the future, and if this thing's cheaper, I want it. Because I want it at 60, I want it at 30, I want it at 20, whatever I can get it for. If I can get it cheaper, I want it. Next question. What about the amount of users? Is there more or less people using this thing? Well, Bitcoin wallet addresses recently hit an all-time high. So there's more wallet addresses than ever using this network. Interesting. Interesting. Sound like a bit of an idiot. You might have heard me tell the story, and I'll just bring this analogy in because it helped my understanding of volatility, because it takes a while to actually understand about this volatility and why it's the price we pay for performance. It's been able to ride through these markets. Jeff Bezos was asked by a reporter, how did you stomach the volatility of Amazon? Because 8 times Amazon drew down over 50%. At one stage, Amazon drew down 98%. I think 3 times it went over 90%. Drawdown. Like, that's pretty much going to zero. And the reporter asked him, how did you survive that? The reason why he's the richest man in the world, or the top 2, whatever he is because he didn't sell his shares. He didn't sell them early. Everyone else was like, fuck this, I'm out. You know, of the 8 times when it was drawn down with massive volatility. You know, you might survive the first or the second, but you're not surviving them all. No one did, except Jeff Bezos. But he was asked by the reporter, how did you survive that volatility? And he said, well, I didn't focus on the price. What I focused on was Amazon getting more customers. So I focused on, was my network expanding? And I knew if my network was expanding and I was getting more customers, my price would soon catch up. You know, the fundamentals are what matters. Price is a lagging indicator. So I don't focus on the fundamentals. I don't focus on the price, I focus on the fundamentals. And of course, we know how that story played out. Amazon, possibly one of the highest performing stocks of the modern era, and made him the wealthiest man on the planet. So that is why I focus on Bitcoin's fundamentals are growing. Bitcoin's wallet addresses are hitting all-time highs, and why I see this as an amazing gift to me as an investor. Use a dollar cost average strategy to protect myself against fear and greed, which we all suffer from. And I suppose we all have to ask ourselves now, you know, is our strategy, how is our strategy working? Because we all come into crypto and we speculate, and, you know, let's say without being a shiller, on my bootcamp course, I teach people how to set up a strategy that is working now and protecting people throughout this market so they're not losing their arse. My course costs 199 quid. Many people didn't invest in the course, and I'm not saying with me, with any sort of training or education. Their losses are more than 199 quid, much more. People are messaging me saying they're down thousands because they didn't get educated. And they walked in and they built a shitty ass portfolio that'll be destroyed in a bear market. And that's unfortunate, but it's a lesson. Don't do my course, you know. But there's 2 ways to invest. You can build a retirement plan around this thing, and you can speculate in the bull market. Speculate in the bull market, 9 times out of 10, you will get wrecked, okay? Dollar cost averaging and building a position with solid assets like Bitcoin, maybe a little bit of Ethereum as exposure, leveraging stable coins and some other things, is how to create generational wealth in this industry. All the shillers and the callers and the market timers, you know, and all this sort of stuff. The Patreon groups of buy this one and here's the next latest and greatest. Like, oh, that shit's probably down 80%. I don't know. I don't really own any of it. But it probably is. So it's a chance to reassess your portfolio. If you're smashed, if you're bleeding, don't worry. This is what I do. I consult with people from 7 in who this happens to I've been speaking about it for a couple of years to try and warn people, don't let this happen. But if it has happened, it's like, well, just deal with the present. Your losses aren't crystallized unless you sell. If you're holding assets that are bear market proof, happy days. If they're scams or shitcoins, well, they may not survive. And, how are you set up to deal with that? And that's just, something that we all have to work through as individuals. And then we improve our investment thesis. I'll talk just a little about miners, because I think this is pretty interesting. Miners are now going public. So I'm focused again on the fundamentals. Miners are going public. And I will do a full video on this, because it genuinely it warrants a full video. So miners are going public. Miners make Bitcoin. They're going public, which means they're able to raise money. Okay? They're able to get funding from their equity. With that funding, they're buying more hardware so they can mine more Bitcoin, but they're also buying Bitcoin. Okay? But guess what? Not even that. They're not selling their own Bitcoin. So traditionally, miners mined Bitcoin, sold Bitcoin to the market, and that's how the thing worked. We bought the Bitcoin from the exchanges, whatever. Now the miners are mining Bitcoin and they're not selling it, so they're hodling Bitcoin because they know we're mining this thing, and if we keep it, price goes higher. Interesting. Now they're public companies, so they're mining Bitcoin. They don't have to sell it because they have the funding, and they're using that funding to actually buy Bitcoin off the market. So where the hell do you get a situation that a company, okay, produces a product, produces as much as the product as they can, keeps the product, doesn't sell it to anybody, and then buys the equivalent product from their competition to hold that? The fundamentals are just like, wow, it's crazy. And then it's half price. And it's like, do people not look at fundamentals? Am I the only person who looks at what's the long-term outlook on this thing? So very bullish fundamentals. I think, in that the actual suppliers of the Bitcoin aren't even fucking selling the Bitcoin. Obviously, we have this massive volatility. We have the retail-led volatility. We have media FUD. We have fucking China FUD. We have Russia FUD. We have Fed FUD. And we as investors get cheaper prices to allocate into an amazing asset. Interesting, huh? So, where do you go from here? Where do we go from here? If your portfolio is destroyed, consider reassessing how you've constructed it. Okay, there's two ways we can manage a bear market. The bear market is where you get rich. You don't get rich in bull markets. You lose all your money in the bull market. And some people leave, and then they come back in the next bull market and lose all their money, and they do that cycle forever. And in between that, they're in Paddy Power and they're buying lotto tickets. Okay? Some people learn when they've lost in the bull market, because we all do, the bull market screws you. And they come back and they stick out a bear market. And the bear market is where you actually create the wealth effect. You're able to generate wealth in the bear market. Okay, so assess your portfolio. If it's not bear market proof, have a look at the weightings, have a look at what you're holding. We know Bitcoin will make a new all-time high. When, I don't know. But I'm confident it will. That's my whole investment thesis. That's how I've set up myself up. Okay, I'm willing to hold Bitcoin for 10 years. In fact, I'm willing to hold Bitcoin forever. So we know Bitcoin will recover. So if it's cheaper, I want to buy more. I want to hodl more. That's why the retirement plan, the fucking pension plan that I teach people in the workshop to build, it's based around the asset, the secure asset that will be here in a decade. And it's not on high risk stuff. We have allocations to high risk stuff, but very low percentages, so that if they do blow up in our face, it doesn't harm our portfolio. And if they do blow up and have amazing upside, well, it benefits our portfolio. So it's a risk. We're managing our own risk. So if your portfolio is destroyed and you don't think your allocations are bear market proof, now's a chance to readjust. Now's a chance to educate. Now's a chance to learn and get it right as we move forward. The fundamentals are insanely bullish. I'm a hodler. Hodlers are just, we hold on for dear life. We've gone through this before. We've had crashes. We've had corrections. And we understand that this is the journey we pay. And I think now you'll learn the lesson, because people always say, oh, that fella got lucky. And I've said it before myself, when I didn't understand this journey. I wish I bought Bitcoin in 2015. I should have. It was so easy for him. Sure, he bought Bitcoin in 2014. He got lucky. No one got lucky, baby. They rode through this extreme volatility. So it was not luck. It was that they'd done the work. They built a portfolio that was bear market proof. And it certainly wasn't luck. So I think it's unfair when people say they got lucky, they bought Bitcoin. Nobody got lucky. When you're in the market for a while and you go through these crashes and corrections, you start to understand this. Guys, I see scammers in the comments. please ignore them. Give the video a share if you got some value from it. I'll be putting out some more content because I know people are bleeding and hurting, and I hope it didn't come across in a "I told you so" way. And if it did, well, that's me. I'm a bad communicator. But it's just like there's no mistakes. There's just like we win or we learn. That was like something I always try and do because I make mistakes all the time. Yeah, win or learn. Guys, have an awesome day. Thanks for being here. And I'll be live again. Give the YouTube channel and I'll subscribe if you're a Facebooker. I have got some good people coming on the YouTube channel, but I'm not going to mention any names, but we have some really cool guys that I think you guys are going to get a lot of value from. So make sure you're on board on them because I'm only going to be able to do them on YouTube. Guys, have an awesome day. Dinny out. Boom. And thanks, YouTubers. Yes.